It's been a big week for cryptos and for NFTs. Edward Snowden tweeted the other day that Bitcoin, now that it's been formally recognized as legal tender in the first country, El Salvador, will certainly spark a race for adoption because latecomers might regret hesitating. We'll have to wait and see on that one. And we've also seen NFT sales soaring lately. Just having a look at some numbers on that. They've sold from $13.7 million in the first half of last year to more than $2.5 billion in the first half of this year. That's a 20-fold increase. Quite something there. Chris Becker, blockchain lead at Investec, is here with us on Business Talk and Business Tech. Chris, let's start with the NFT situation. What's going on there at the moment? They're almost like the new fan cards or collectibles in sport in particular. Dale Steyn announced this week that he's releasing a limited edition NFT collectible. What is a non-fungible token? Maybe we just need to dial it back a bit for those who've been living under a rock. And why are they becoming so popular?
Yeah, hi, Michael. Good to talk to you again. So I think it's a good idea to take a step back and just think about what a non-fungible token is, or an NFT, or a Nifty, as some people are referring to them. When you talk about a cryptocurrency like Bitcoin or Ether, or even a currency like the Rand, you want that asset or that token to be fungible. In other words, you don't mind if there's 200 Rand bills in my hands here, two separate individual 100 Rand notes. If I need to pay you 100 Rand for something, you're not going to mind which of the 200 Rand bills you get from me. They're fungible, they're interchangeable, they're the same thing essentially. They carry the same value. A non-fungible token are different or unique assets. And so the two things I'm holding in my hands are different. So they don't serve a good purpose as money, for example. But things like artworks would be seen as non-fungible tokens. A title deed to a piece of real estate would be a non-fungible token. If you use the blockchain jargon for it, it's a unique asset. What's happening in NFTs in the sort of crypto and blockchain space is that these unique assets are being registered or recorded on a blockchain technology like Ethereum, where most of it is recorded and registered, where that title deed is giving ownership rights to some kind of digital good. And the ownership of that digital good now is tokenized. It becomes an NFT. I can now trade it or sell it with other people. I can also now obviously collect these things. And so people love to collect shiny, interesting new things. And so you are seeing a bit of a craze around this new type of digital collectible, which doesn't have to be constrained and restricted to a siloed database like Facebook or Instagrams, for example, where you can actually own it.
Absolutely. And why we're seeing such a use case for this exploding, particularly to your point in art and in sport now as well. In America, they love trading baseball cards. That's a big thing in America. Now, if you get it signed and you get a digital version of that, it's not fungible, it's one of a kind. I can understand how that could develop real value. If we look at the sales volumes for NFTs or Nifties, they surged to $2.5 billion in the first 6 months of this year. I mean, that's just phenomenal growth. How big a threat are they to the real art world?
Yeah, look, interesting question. And I don't know the answer to that. I don't necessarily instinctively think that they compete. I think what I'm saying is I don't think they necessarily compete with traditional art. I think what it's forcing us to do, in the same way that cryptocurrencies have kind of forced us to take a step back and fundamentally ask questions like, what is money? How does currency work? Nifties are doing a similar thing to the art world. There was an interesting project from Damien Hirst. He's a well-known dot artist, and he did 1,000 dot paintings a year ago. And he sold these paintings. He firstly physically produced these paintings, but he also tokenized each one in an NFT format on Ethereum. And people bought these artworks. 1,000 paintings were left in a vault, not available to whoever bought the NFT. But a year later now, you can choose as an owner of one of these artworks whether you want to take possession of the physical artwork or the digital version of it. And either one that you choose, the other one is going to be destroyed. And so it's asking some interesting questions of like, what is art? Fundamentally, what is art?
Yeah.
And so that's to me very interesting. It's essentially getting people to think deeply about what art really is and what the value in holding art is. And then I also think it's created a new category for digital artists, in the sense that you can now produce digital artworks, but you can also monetize it quite directly, and you can earn royalties from any secondary market trading in the content that you'd created into perpetuity, for example, which is a complete game changer, I think, for digital artists. It wasn't available to them before.
Yeah, and that ability to annuitize and earn royalties is so much easier to track because of the blockchain technology. That's the big game changer for me here as well, is that ability to be able to have complete trust and line of sight through the entire transaction. Well, you asked me whether or not we need to start rethinking art, and I think that's what art should be doing in any case. I've got a print of a Matisse on the wall here, and I don't know if I would want to frame a big digital screen and have that up there. But the idea of having a one-of-a-kind Banksy, for example, tokenized, really appeals to me. When you look at the safety of these, I know an NFT collector, Panksy, with a P, ended up buying a fake Banksy NFT for nearly 5 million Rand earlier this week. And although nearly all of the money was returned to the buyer, I suppose the incident does highlight some of the ways that NFTs are exposed to security threats.
Yeah, look, I think there's a bit of a mania around this. There's a bit of a land grab. People are getting excited about this new type of asset. I think it's the first time you really see a digital goods that can be outright owned by people, where they're sort of, in a sense, where it's provable and verifiable on a public ledger like a blockchain. And because it's this public database on top of which you can register all types of new assets. Well, we've seen firstly an explosion of crypto tokens. So when people talk about the thousands of cryptocurrencies, it's because you've got this open database into which you can just create new currencies at will. Not all of them are going to succeed. In fact, I think almost 99% of these cryptocurrencies are going to fail. In the sort of NFT space, you have legitimate artists tokenizing their digital content, but you also have fraudsters and crooks coming in and pretending to be people who they aren't. And in a mania like this, I think we're in a bit of a mania in the space. There are people who are going to fall for those tricks and scams, So it's no different to any other type of scam or mania where people can fall for these things. And so people really need to be careful around who they trust and what they want to buy and what might have value over the long term, because I think a lot of these things won't hold their value over the long term.
On that point about who you trust, how does one go about verifying these things in an environment where, much like cryptocurrencies, it's like the Wild West out there, largely unregulated, although we see the SEC and other countries trying to grapple with how we kind of build confidence and build the loose regulation around it. How do you build that trust? How do you as a consumer know you're dealing with a trusted counterparty?
Yeah, look, so legitimacy and trust is a process that takes time and it's earned, and legitimacy is gained from interaction with the type of technology system or with someone over a period of time. So obviously these things are quite new. To old Ethereum hands, for example, it's quite easy to sift between real people you can trust and people the red flags you should be looking out for. To be concerned about. So there's a process of do your own research. You need to get comfortable with the space that you're operating in. You need to do your homework in order to build legitimacy and gain trust in people in the new community. On the other hand, what we are seeing is a big art auction house like Christie's, for example, auctioned off that Beeple artwork that sold for a huge amount of ETH earlier this year. I think the value of the Ether raised, for that transaction, for that sale, was something like $60 million worth. And Christie's is a very reputable, well-known international art auction house. What was interesting about the Christie's auction of that artwork, and I see they're doing more at the moment, is that those transactions were paid for and settled in ETH, the currency, and the settlement happened through a smart contract on the Ethereum blockchain. So you're seeing established institutions like Christie's coming in, using Ethereum, accepting payment in ETH. People obviously went and he sold that ETH that was, gained through the sale immediately for dollars. But that's how these new technologies are likely to gain legitimacy and trust over a period of time. Just to, again,
they shouldn't have sold. They should have been hodlers. They should have kept on to their
Yeah, it would have been, I looked at this the other day, it would have been worth double, hey? But if you take a step back here, Michael, I mean, in the 1990s, when the internet protocols like HTTP and HTTPS were first, being widely used, banks were very cautious of exposing clients' banking information online. Those protocols hadn't gone through a process of gaining trust and legitimacy yet. But now we're all very comfortable and familiar with it. We're going to go through a similar process with the Ethereum blockchain and NFTs and the types of things you can trust, the red flags you should look out for, before this really goes mainstream. So it'll take some time.
And I know you're a big believer that, that this is blockchain and NFTs are a game changer for content creators and for artists. And yeah, I think it's a great thing because, artists at the best of times tend to get the rawest of deals. Can you just elaborate on how content creators, how artists can leverage this technology now to their benefit?
Yeah, so there was an artist that I was listening to a couple of weeks ago. Was a podcast that I listened to, and this artist made an interesting point. The space of digital content creation that they had been a part of before NFTs was a world where they used platforms like Instagram or Facebook. Let's take Instagram. They would create content and publish it to Instagram, and Instagram, the business, would essentially pay the artist in likes. The artist would gain lots of likes and perhaps a following, off of which they can spin off a side business, perhaps get commissioned to do a specific piece of art. They couldn't monetize their content directly on the platform. So
it wasn't Michelle Fulgun, was it?
No, it was an American artist called People Pleaser, PPL Pleaser,
right?
Pseudonymous. But now with NFTs, they're creating content and distributing that directly to a retail market, and they're being paid for directly for creating that content. And so it's changed the business model for them, and also distribution and direct access to markets is possible now, where you don't have to work through these intermediaries. If you're a musician, for example, of going through Spotify or Apple Music in order to get your music out, where they take a huge portion of the revenue as well. That's where this comes in. And like we discussed earlier, you create that content, you sell it directly to the market. And then when that piece of content trades in a secondary market, you can be earning perpetual royalties off of the value of each sale forever. So that's very interesting, obviously, to artists, whereas before it didn't quite work like that, at least in the real artwork, and music also wasn't that attractive,
I love it. We're disintermediating the likes of Sapra now and Needle Time in the radio business. I can't wait for that to happen. Now, moving on from the world of art, I know Investec has rather quietly and under the radar tested a digital vault this year. Some have said that it could signal Investec's crypto entry. Can you just share a little bit more about what you're up to over there?
Yeah, so we've been researching this space for the last 4 years quite intensively. We've done a lot of research and development, and the process that the path that's taken us down is to have the capability to be able to connect to blockchain technologies. It's a new way of communicating and storing value. And so what the digital asset vault is essentially a technology system that we've built internally that would give Investec the ability to connect our clients to these types of technologies. So in the future, if clients wanted to own NFTs, art NFTs, music NFTs, real estate NFTs, I think many things in the future will be tokenized in NFT format. We will be able to facilitate their engagement with this new asset class. And then over and above that, if central bank digital currencies or or even crypto assets generally, as people are familiar with them, were to gain traction, we would be able, again, to facilitate our clients' entry into these assets. And then we haven't really started discussing what smart contracts might do, but everything starts with the wallet. Whether you want to hold NFTs, crypto assets, or interact with smart contracts, you need to have a wallet. And so that's what we've been focused on building, in order to just be able to, I guess, move with the times. As new technology systems are introduced, we need to understand it and have a process and a method in order to adapt.
And within that, the Reserve Bank, I know, is quite forward thinking when it comes to digital assets and digital currency. How closely are banks in the country currently consulting with the Reserve Bank? There was a sandbox exercise a couple of years ago. I don't know if COVID has set that back a little bit. Just give me a sense of the current dialogue that's happening.
Yeah, so there's a cross-regulatory body known as the Intergovernmental FinTech Working Group, which is comprised of the SARS, the SARB, the National Treasury, Financial Intelligence Center, the Financial Conduct Authority, FSCA, are all involved in this, what is known as an innovation hub. And one of the environments there is a regulatory sandbox. So this digital asset vault that Investec has built is currently in testing in the regulatory sandbox. And so working extremely closely with the regulators in order to understand this new technology and asset class, in order to, come up with appropriate regulations, I guess, and to find a way to market for a product like this.
Yeah, and I mean, when you say appropriate, that's the key here, because we're dealing with very nascent technology. You don't want to over-regulate too soon and too early on, because then you stifle the innovation. Would you say that it's a concept that's been working well?
I think so. In the South African context, I think it's been working well, yes. So that environment's there, and it's available to any incumbent institution to if they want to explore and innovate in this space, but they're concerned about the regulatory environment, it's there to apply in order to work closely with the regulators to essentially launch a product in close collaboration with the regulators. And I think it's so essential, because what one sees in industry is a hesitance to get involved in these new technologies because the regulations aren't there yet. But the regulators need to know what it is that they're regulating. And so you're in this catch-22 where the regulations can't be drawn up until you kind of put something on the table, say, this is the product, this is how we're doing it, so that they understand what is to be regulated. Without that type of process where you're working in close collaboration, where there's two-way flow of information, it's very hard to progress. I think this environment's been quite constructive to move the regulatory environment forward.
Absolutely. And then you end up with, if you don't have that kind of interaction, poor regulation, then you complain after the fact, but then you weren't part of the conversations right up front to help inform and educate the regulators. It really is a two-way street. And it's nice to see, because I think so many other regulatory bodies in South Africa, I get the feeling they wake up in the morning and they don't say, how can we work with industry? They almost say, how can we work against industry? But this is an example of where it is working, which is great to see. Now, Bitcoin, indeed, other cryptocurrencies have been on a wild ride the last couple of weeks. I make a point of sharing the Bitcoin and ETH price every morning on hot radio. And it was quite remarkable on B-Day just to see how Bitcoin plummeted. And El Salvador saying it's going to start using Bitcoin as legal tender. Just as it seems to get going, the crypto world seems to trip up. It's extremely volatile. How long do you think it's going to take with this kind of volatility to start settling down?
I mean, that's a difficult. I don't know the answer. In short, I think it's going to take time. Like I was explaining earlier. It's a completely new financial and monetary technology that's still in the very early stages of becoming adopted throughout the world. And so one can think of this as a startup monetary technology. And as we all know, startups are extremely volatile. I mean, these technologies and assets like Bitcoin is only 10 years old. It's competing with the dollar, which is much older than that, and things like gold. And so startups are volatile. There's a huge amount of uncertainty and speculation around the future. And And you have something where the supply of, let's talk about Bitcoin specifically, is scarce.
Mm.
But you've got lots of speculation going on multiple fronts around how the technology is going to be used and what regulations might be like. And, all these questions are being asked, and that pushes the demand side around a lot. Where those two curves intersect, you've got your price point. And so the price moves around. But if you take a step back and you look at this technology, which fundamentally could change the way that information is stored on the internet. Remember, the way that the internet's developed, the protocols that we use mostly today is all for the communication of information between private servers, between private data centers. Big tech sits on most of those data centers. What blockchain introduces is public data centers. And so there's a very fundamental change in the way that data can be stored and transferred between each other. And so we're still in the very early stages of adopting this technology. That's where we are if you take a step back. Early stages of adoption, no more than 5% of the world's population have interacted with these protocols. I do think that more than 50% of the world's population will connect to and interact with these protocols in the future. And so adoption still has a long way to go. And so I would say it takes another 10 to 20 years before the volatility that we're seeing now really starts to smooth out.
And you've also
So
said
that's
in the
kind of my
past,
answer. It takes a long time.
It's going to take a long time. And you've said in the past as well that it's going to represent, when it gets there, the biggest wealth transfer in the history of the world. What do you see being the key ingredients that have to be in place in order for crypto to succeed and to actually achieve that, as you've mentioned before?
Well, key ingredients, I think, are that it's useful to people. That's, I think, the most important thing. So are these technologies better than what we use right now? I think that's going to be the deciding factor. I think regulations will follow the use case. And so, that's why this conversation around NFTs is interesting. A couple of years ago, it was mostly, people would talk about Ethereum and the conversation would be about ETH, the currency, and is it useful? And then we kind of moved into 2018, 2019, and last year, and there was a bit of a mania and an explosion in another use case for Ethereum, which was known as decentralized finance, which are smart contracts on Ethereum's blockchain that facilitate financial services, an entire industry of financial services, from money markets to derivatives to, other types of activities, credit markets, and there's a long list of experimentation and innovation that's going on there. Move into 2021, and suddenly we're talking a lot more about another use case of Ethereum, which is NFTs. So I think we're going to go through a process still where we figure out what these different use cases are and what the synergies are between all of them if you connect to, let's say, the Ethereum blockchain over just connecting to your bank or connecting to the internet as it stands today. What does this offer humanity that's better? And I would just add, this doesn't necessarily cut banks out of the picture. Banks can connect to this technology just like they connect to SWIFT or Visa or MasterCard or BankServe or any other of the payments technologies that they use to move money around. This doesn't necessarily threaten banks if they know what's going on and prepare for the possible disruption that it may bring.
Well, on that point, I mean, what do you see the future of money and payments looking like then? If you're one of those forward-looking banks, and I noted earlier before we started talking that Macquarie's doing a test with another Bitcoin company in Australia to introduce renewable energy into its mining processes, because we know that's one of the issues around it. And so there are forward-looking banks out there who are engaging with the technology. What does that future look like?
I think one can think of, look, this future is already here. It's just not evenly distributed. But one can think about having a portfolio of crypto assets that reference real world assets like the dollar or Apple stock or Tesla stock, for example, where you have the ability to seamlessly use that portfolio of assets as collateral to take a loan out against it in a traditional type of currency. Firstly, so that's a seamless process. You don't have to speak to a bank necessarily in order to get that done. With a few clicks on the internet, you can do it. Plus, you have the ability now to reallocate that portfolio while keeping it as collateral. with a few clicks. And you have the ability to use your portfolio of assets, for example, as a payment instrument as well. And so you can start to think of the universe of value that's sitting on the internet, where there's this frictionless and seamless interoperability between different types of financial use cases. That makes sense.
It really does. And, on the back of that, we're going to have to get through all of the hype. And there is a lot of hype. I mean, if you just look at what Taco Bell's did, they sold NF tacos. There was Charmin rolling out virtual toilet paper called Nifty P. And I mean, that's great to get to talking about it. But I think to your point, Chris, it really is about those use cases, disintermediating, stripping costs out, making things more efficient and more effective. And again, just I think another force that's pushing down on all of these inflationary pressures that might be creeping up, and on a broad scale. Just again, why I think much of the inflation talk is also overhyped. But that's a conversation for another day. Chris Becker, blockchain lead at Investec, thanks so much for sharing some more about what's going on in the world of cryptos and nifties here on Business Talk. Take care.